Good morning. This is Friday, December 2nd, and trading with Teddy. Big week in the markets. Today was unemployment. The non-farm report came out, and it was actually tame, and I don't think many people were really looking towards it. A big event that is flying under the radar, I think that has taken precedence over the normal non-farm number, is Sunday night's Italian referendum vote. So that'll be interesting. The potential for volatility is certainly going to be there. You know, I think that the popular belief, if there is a popular belief on this, because it is flying under the radar, if they do come in and reform this stuff in Italy, we're going to see gold take off. You know, we should see the euro really take off. So right now, gold is stuck at 1170, a really key support level that so many the big fish have had their eye on, and it shows as the market has not been able to close below there. We saw a similar scenario last month, I think at the 1250 level, where it just sat there for a couple of weeks before ultimately making a big move ahead of that election night, and before, subsequently falling over 150 bucks. So as for the election, obviously the results have had virtually the exact opposite impact that so many of the financial media were forecasting for gold in the equity markets. You know, I look for volatility to kick back in over the next couple of weeks, and at this point, it's almost certain that a December rate hike is going to take place. You know, whether it's 25 basis points or 50 basis points, I'm not sure that it really matters, because we've seen the treasuries get absolutely hammered. We have seen gold and silver get absolutely hammered too. So it is priced in, and priced in big time. I actually think this is really going against the grain. As ugly as gold looks on the chart, there is potential for some very, very big upside, and these are the trades we really like via long options. Buying futures here is way too dicey. I hate picking bottoms, but the risk reward on long calls, looking at specifically the January 1200 and 1250s, could offer some potential big risk reward. Overall, the market's very bearish. There's no doubt about it. It's been oversold to extreme levels for most of the last week and a half or so. But we'd like this shot to take a low risk, high reward, pull the trigger type move. These are my thoughts, and not those of ADM Investor Services or Archer Financial Services. Thank you.